Okay, so now, maximum federal tax level is 35%, but that's not the whole picture. When you earn income from a job or career over here, you also have to pay something on top of that we have that's referred to as Social Security tax, or if you're an employee, we call it FICA. That's another 15.3%. So watch this. If I add up the federal tax and Social Security tax that we have to pay on our income, if we make a high enough income, we get to the point where 50.3% of all the money that we make, we don't get to keep. And this is federal tax only. Who else do we have to pay in this state? The state of Minnesota, which is another about 8%. Okay, so now here's what I'm saying. Go ahead. Work really hard on your job or career. Get to that level where you're making lots of money. When you get there, 50% of every dollar you're earning, you don't get to keep. Or go to this side of the wall and get good over here. If you get good on this side of the wall and you're willing to hang on to your investments for at least a year, we now call these long-term capital gains. And if you make a profit, yes, they bounce over to this side of the wall, but they're not taxed the same as your income if you held them over a year. They're taxed at a much lower level, which is called long-term capital gain rates, which is currently 15%. Oh, and by the way, this is 15% total with no Social Security tax on top. Okay, so now here comes the big question. What does this teach you? Should teach you this. Where do you want to earn the bulk of your money, gang? This side of the wall or that side of the wall? You want to get over on this side of the wall. Okay? Now, to be fair, most of us start over here, right? I'm telling you though, your mission in life is to get as much income as you can on this side of the wall. Because this side of the wall is where you pay the less amount of tax, you get to keep more money. And by the way, just to prove this is not just me, Dave, talking, I want you to think about this a second. Have you ever heard of stories where a major executive or a CEO of a major corporation says this to their employees? He says this. You know what? Our company's struggling a little bit. And since we're struggling a little bit, here's what I'm going to do because I'm such a good guy. I am not going to take a salary this year. Or in other words, my salary is going to be $1, just so I'm on payroll and get insurance and benefits. But other than that, I'm not going to take a salary. In lieu of salary, what I'm going to do to work really hard for this company is I'm going to take stock or stock options in lieu of salary. I'll take a couple $1 million of that stuff because I'm such a good guy. Tell me what I just did. Didn't I just move all of my income from this side of the wall over to this side of the wall? And by the way, I'm going to hang on to that stock for several years, and then I'm going to sell it. When I sell it, what's the maximum tax on all those profits I make on that stock? 15%. Did I do something very shrewd that my employees don't even understand? Would you agree? Do you think this happens in the real world? Absolutely. So what I'm going to try to teach you is, let's learn to get on this side of the wall and get there faster to produce income on this side, because then your tax is at a much lower level. All right, now, there's one more theory I want to teach you about the wall, and this is not in your notes, but it relates to this, and I'm going to build to this on more time, but watch this. There is a little guy who walks along the wall. I call him the garter of the wall. He's a little guy, and his name happens to be called Urs. Now, let me tell you about Urs. Urs, or the IRS, walks along the wall with one intention. He does this. Anybody who makes a positive amount of money, he grabs around the neck, throws him over the wall. Anybody who makes a negative amount of money on that side of the wall, he beats them down and says, you're not getting through the wall. However, as Urs walks along the wall, around his waist he carries a utility belt. And in one of the pockets of that utility belt, he has a jackhammer drill. And if you approach Urs in a certain manner, Urs then pulls out the jackhammer drill and he drills you a hole through the wall to allow a negative number that you may have to sneak on through the wall as a tax deduction against your income. But Urs will only do this for the people he considers to be his pal. So, based on what I just said, what would be something you might want to learn in the next hour or so? How to become his pal, which is exactly what I'm going to teach you in this manner. I'm going to teach you, first of all, as it pertains to real estate, what's deductible on this side of the wall. And by the way, what falls on this side of the wall is primarily the homeowner rules. Everybody in this country has a benefit of homeownership, so therefore, since most people have a job, they create a set of rules that falls against the job income over here for homeownership. I'm going to cover that first. Then when I'm done with that, I'm not going to talk about the stock market at all because it's not a stock market class. But I'm going to move you over here underneath the pig rules. And I'm going to show you that when you own a rental property, how it works from income and deductions. And if this ends up negative, I'm going to show you how we make Urs our pal so we can take that negative number through the wall against other income we might have from other sources. So I'm going to start you here, bring you over here, and then show you how we get through the wall. So we're going to start on this side of the wall for the next thing in your notes where it says tax deductions that apply during home ownership. Now, before we write down anything, I have a couple questions for you to start. Does our government want us in this country to own a home?
Yes.
Yes, and that's the correct answer. Why? Well, we can rent. I mean, that's not necessarily a place to live. What's the major reason? It's not property taxes, because property taxes are property taxes whether it's a rental or whether it's a house. It's not for property tax reasons. Here, I'm going to help you. The reason that our government wants us to own a home is because of a law called the Law of Space and Stuff. Watch this. Gang, when you go out and you buy your own personal residence, right? You now feel ownership to that space within those walls. Isn't that true? Well, the law says when you feel ownership to space, you must fill it up with stuff. And if you don't think this is the law, I suggest to all of you in this room that own a home, you don't have empty rooms. And if you do, you've been thinking about stuff. Isn't it true? So why is this important to understand? Because if you go buy a house, what's the next thing you do? You go buy stuff. Therefore, you spend money in our economy, which creates jobs for other people and stirs the whole economy. Isn't that true? So therefore, the rule is this. Our government wants you to own a house because you take ownership to that space. Then you go out and you buy stuff for that space. In fact, if you notice something, over the last few years, tell me, over the last 20 years, what's happened to the size of the houses that people buy? Bigger. Does our government love that? Yes, because now you have more space, which means you must go buy more stuff. That's one of the reasons. All right, now, in order for our government to entice you to go and buy a home and own it, we have tax benefits. Now, before I go through these, though, I want to make a comment. By living in this country, we take what I'm about to teach you for granted. Because we think, well, we have it, everybody else must have it. Go to other countries in the world, and you would notice that a lot of the laws that I'm teaching you do not exist in other countries. In other words, one of the laws we have here is we get to deduct the interest on our mortgage to buy our home. Go to Canada and buy a house. If you go to Canada and buy a house, you can't deduct the interest for a loan in Canada. Do people still buy houses? Yes, but they don't have the percentage of home ownership that we have in this country because we have incentives for people to own homes. And that's what I'm going to take you through. And here's the first incentive. Our government says, from a tax standpoint, when you go out and buy a home, you get to deduct the interest on anything referred to as acquisition debt as long as the loan is $1 million or less. What goes in your blank in the notes is $1 million.